The US government is admitting that they need capital and they need it quickly. Check this out. The United States Treasury just put out a press release along with this tweet from Scott Bessent saying they need to move quickly to implement the Genius Act framework. Why quickly? Why now? Why so suddenly? The Genius Act was signed into law July 18th of 2025. Do you think that this has anything to do with global bond yields blowing up in every market across the world all at once? I don't know. Are we in the Minsky moment that Paul Tudor Jones predicted 2 years ago? Paul Tudor Jones is one of the greatest investors of all time, and he predicted almost everything that is happening now would happen almost to a T.
Financial crises percolate for years, but they blow up in weeks.
Today, we're going to go back to this interview that happened nearly 2 years ago to inform us on exactly where we are today. The US government is backed into a corner. He laid out the perfect trade then and what he was doing to position himself for the upcoming collapse in the US government debt markets that he predicted. This is Dante Cook with Bitcoin Simply. Let's go. Scott Bessent in the US Treasury just put out a message calling for public comments on the Genius Act framework. And my question is, why is this happening all of a sudden? The Genius Act was signed into law July 18th of 2025, and he says that we need to move quickly, with other sources saying that it needs to be implemented by January 18th of 2027. In his comment, he says the Genius Act will lay out a framework that will cement the US dollar as the global world reserve currency and also establish America as the crypto capital of the world. How can you do these two things simultaneously? Well, the only reason that I see that this is needed and this is necessary is because of the debt situation right now in the United States. The United States government no longer has the amount of buyers that are buying both short-term treasuries and long-term treasuries at over 5%. And so how do you accomplish both of these goals at the same time? Well, you implement a framework that has stable coins on top of US Treasuries, which is exactly what these stable coins do. For every stable coin that's out there, they're backed 1-to-1 with a short-term US Treasury or T-bill, which in effect raises debt and money for the US government. With the 30-year bond at 5.3% is basically saying that the market doesn't trust the US government to pay back on its obligations. And this is what Paul Tudor Jones said would happen almost 2 years ago.
Let's assume that I'm making $100,000 a year. You've lent me, because we're such great friends, $700,000. Mm-hmm. That's what you've lent me. And I come to you and say, okay, Andrew, I'm going to pay all that back to you in 30 years. But between now and when I ultimately pay you back, I want to borrow $40,000 every year for the next 30 years. And then at the end of 30 years, I'm going to pay the whole thing back. Would you lend me that money?
Unlikely.
You son of a bitch.
Right.
I thought you were my friend.
Well, this is the problem that we have.
Okay, so that's actually the proposition that the U.S. government makes to every bondholder today. That's the exact same proposition. So think about this. We owe $35 trillion. Our tax take is $5 trillion. So we owe 7 times what our tax take will be this year. Our revenues will be this year. And our deficit is $2 trillion, and it's $2 trillion right now as far as the eye can see. That is literally the proposition that the U.S. government is making to someone who buys a 30-year bond.
Global markets are saying that we no longer want to accept reasonable rates for financing another country's debt. They're coming to the reality that we can no longer fake it in these markets. We can't play the game anymore. The scripted game, the game of television that we're all a part of, this reality TV show that's asking for our comment and our questions, but really, they're just running the play that they always would have at any time. We've just needed to suspend our disbelief. And this is what he calls the Minsky moment.
I was watching this Vince McMahon documentary, and in it, and I loved wrestling, particularly when Stone Cold and The Rock and all of them. So in it, there's a term that I'd never heard of called kayfabe. And in wrestling parlance, that represents the unspoken, unwritten, tacit agreement between the wrestlers and the fans about the illusion that's going on in the ring, the suspension of disbelief that what's going on in the ring is actually, we know it's scripted and we know it's a performance, but they ask us to think it's
Right.
genuine and real.
And
so
that's what you think this is?
Yeah, we're in an economic kayfabe right now. And it's not just the United States. We're in it in the UK, in France, Greece, Italy, Japan being the biggest of all. It's this economic kayfabe. And the question is after this election, will we have a Minsky moment here in the United States in U.S. debt markets? Will we have a Minsky moment where all of a sudden there's a point of recognition that what's going to happen or what they're talking about is actually fiscally impossible, financially impossible?
This crash, the crash that he talked about with Japan being the number one market that this would happen in first, is happening in real time, and it's happening in slow motion, like Travis Kelce in this one-on-one rep. It doesn't matter how much you're told what's going to happen next or what they're going to do. He's going to telegraph his move and implement the slowest head fake of all time and still burn you. That's exactly what governments are telling us and have been telling us with the stablecoin, with the Genius Act, and to everybody else who's betting on fixed income being a source of steady, reliable income in the future. It's not. These markets are wildly mispriced and they're blowing up in real time. The 10-year in Japan just rose to 2.93%, its highest level since 1996. And the stocks are crashing at the same time. Everyone's pricing in the reality of financial excess in Japan. And Paul Tudor Jones tells people how he's positioning his portfolio in light of all of this.
So are you betting on a Minsky moment?
I am clearly not going to own any fixed income, and I'm going to be short the back end of fixed income because it's just completely the wrong price.
Well, we know he's short fixed income. But what is he long? We'll get to that after we thank our sponsors. One of the ways you can short the US dollar is by borrowing against it in a stronger asset class that continues to appreciate in value over time while the dollar continues to devalue. And you can do that by borrowing against your Bitcoin stack. Effectively, you're betting that Bitcoin is going to continue to be stable or go up in value over the long term relative to dollars. And so with Ledn, you can borrow up to 50% of the value of your Bitcoin stack without any capital gains, without any credit checks, and you can repay it at any time. Basically, you're saying you want to be short the dollar and long Bitcoin. But you don't need to be an institutional investor to do that. You can be an everyday person like you and me. And that's why Ledn has been the leader since 2018. They've allowed an institutional grade product to be available to everyday investors like you and me. Don't sell your Bitcoin. Borrow against it with a trusted partner in Ledn. One of the other ways that you could be sovereign in this global debt crisis is by not relying on the financial banks and systems. Because we know when they get offside, when their liabilities outrun their ability to repay their debts, well, they just bail themselves out. And you end up being the bag holder. One of the ways you can remove that risk from your financial portfolio is by taking sovereignty of your Bitcoin, holding sovereign assets out of a banking system. And Bitcoin is one of those, along with gold and other commodities. Consider how you take a piece of your portfolio out of the banking system by holding your own keys. But get a coach to do it. A coach at the Bitcoin Way will walk you through step-by-step exactly how to do this. Get started with the Bitcoin Way today by going to thebitcoinway.com/partner/Dante-Cook. Paul Tudor Jones sees the long game. He's one of the best investors of all time. And therefore, he's not looking at what's going to happen right now or in this moment. And he's making bets probabilistically based on those themes and investment criteria that he has. And that's why he's not only short fixed income, but he's long Bitcoin, gold, and commodities.
Are you off buying gold and Bitcoin and
I
hiding somewhere?
I think all roads lead to inflation. We're going to end up,
But does all roads lead to inflation, therefore gold is a good investment? Is Bitcoin a good investment to you?
I'm long gold. I'm long Bitcoin. I think commodities are so ridiculously underowned. So I'm long commodities. I think most young people find their inflation hedges via the NASDAQ. That's also been great. It's probably some combination. I probably have some basket of gold, Bitcoin, commodities, and NASDAQ, something like that. And I would own zero fixed income. If I had my cash, it'd be very short term. The playbook to get out of this, you see it in Japan right now. They have 2% inflation, 30 basis points overnight. They don't want to raise rates. The playbook to get out of this is that you inflate your way out and you have a small tax on the consumer and you run interest rates and nominal growth rate, interest rates below inflation and nominal growth above inflation. And that's how you reduce your debt to GDP. So you're going to have the Fed, they should be easy. They should be
easy. You want them to cut.
So just real quickly, every 100 basis points, given where our debt to GDP right now, every 100 basis points is worth about $90 billion a year to the deficit. $90 billion. So yes, if we're trying to stabilize debt to GDP, we want to run the most dovish monetary policy that we can without letting inflation become too much of a tax on the citizenry. So yes, all roads lead to inflation. That's historically the way every civilization has gotten out, is they've inflated away their debts.
He says that all roads lead to inflation. There's no way out of this mess that we're in. We're in a world economy that's going through deglobalization, that's trying to reshore all of its supply chains, and has a massive influx of capital into data and infrastructure, things that are expensive like AI. And so we're not going to see the benefits of that for a long time, and we're going to see the actual price increases in the short term. And so you need to have an instrument or an investment vehicle that outpaces inflation. And Paul Tudor Jones says there's one that's better than the others.
Bitcoin is unequivocally the best inflation hedge that there is, more than gold, because Bitcoin is finite. There's only so much Bitcoin that can be mined.
And after selling his Bitcoin stack at the high at $124,000 over a year ago, he's been actually steadily acquiring Bitcoin. He just grew his Bitcoin stake by 19%. He owns almost 690,000 shares of IBIT, meaning that he believes this is a good time to get into Bitcoin and in this long inflation hedge trade that he talked about. The reason why guys like Paul Tudor Jones make money is because they're not looking at what's happening on the day-to-day basis. They're looking out 2, 3, 4, 5 years and betting on what's probably going to happen, which is the Fed's going to need to cut rates. They're going to need to run an easing policy, and they're going to have nominal growth rates outpace the rate of inflation in order to pay down their debt. That's the only way out of this, the big print. They just have the conviction and the ability to put on the trades and hold them even when it goes off sides against them in the short term. But what do you think about the next 2 to 3 years? How are you positioning yourself? We want to hear in the comments. If you're like me that wants to continue to stack more and more Bitcoin, you might work with a partner like SAS Mining that allows you to get into Bitcoin in a diversified way by not just buying it through an exchange. You give SAS Mining your money, they hook you up with a Bitcoin miner, and they mine sats on your behalf. They send them straight to your wallet, and you can get some powerful tax benefits. Use the QR code to get started with SAS Mining today. If you haven't already subscribed to the channel, do so. We drop fire content like this 7 days a week. We bring up old clips and interviews that bring you the alpha that you can't get anywhere else. This is Dante Coca Bitcoin Simply. Happy stacking.